foggy-brained, as they say. It's noisy today. Yeah, it is noisy today. What's going on out there? The whole world moving around us here. And we're in here filming to the world. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? You're right there. I know where you're at. Got the new setup here. Still getting used to it, so it's a little bit weird. Hey, Matt, John, DC Rochi. I like it. Tron, welcome, welcome, welcome. Hello and welcome to the show. Moving a little slower today. Your boy went hard this weekend. I was at the concert. I'm not a young man anymore, so I'm still recovering. But so we're going to work through everything. I got actually a lot of different things to cover. And so we'll do like we always do. We'll just kind of go through it here. I'll take your questions at the end if you have any questions, and we'll do that. Oh, last week our Wine and Wealth class for clients was on end-of-year tax planning, some different things you may think of if you're trying to do some tax planning, just trying to help keep your dough straight there. And this week is TBD, right? We're trying to figure out what's something cool we could talk about this week. We'll see how the market plays out because we actually have an oddly volatile market in a good way. But maybe there's some more we can talk about there and expand on that. We do the class every Thursday for clients, and just a way to go more in depth and kind of hang out, answer questions and stuff, and be a little bit more specific there. Let's dive in, man. Let's go take a look. Here is the Dow for the day. The Dow was one of your leaders. How many times have we said that this year, where the Dow is one of the leaders, almost back over the 50-day? I'll say it closed above the 50-day there. And, it deserves to be one of the leaders when you have Amgen actually participating. This one hadn't participated next to like no time at all. Intel actually participating as well. We just haven't seen that, right? You haven't seen days where the Dow has had even a modest positive day, and these two stocks have participated. So really broad, kind of a broad rally there in the Dow. There's only a couple stocks lower. I think it was Nike and Verizon. So Nike was down about 1% and Verizon about 0.5%. That was it. Everything else was higher on the day. And by the way, I'll point out all the extended stocks from last week did start their bounce. American Express, that was the one I sold the 140 puts on. I closed that position. I got 32% of the total premium collected there. So that one's done. Got a nice bounce on that one. Happy with that. You got Visa also starting to bounce there a little bit. I've got some work to do on that one. I was early on those. But Visa getting a little bit of a bounce today, which... Look, there's no way. It looked like it was bottoming out before and then made two new lows. So a little bit skeptical there, but it's nice to see it moving higher. I'm not complaining. Honeywell was the other one in the Dow we talked about getting extended as well. All of them bounced. Just a broad rally in the Dow. Not too much else to mention there. With our Guess the Dow, by the way, we have last week was our last weekly competition. Now we're going on to the super duper Guess the Dow. And Cody, who won Guess the Dow?
Yeah, your last weekly version of Guess the Dow for the year. Your winner was the same person who won last week.
That's right.
Is our first time back-to-back winner. That was Glade Erickson. Congratulations to them. That was crazy. We double-checked, triple-checked. I mean, we went through everything to make sure that we weren't wrong on that one. So congrats to them. That's awesome. Does it matter if we tell them the email we got today?
That was kind of funny, too.
The person that actually delivers for Glade, their mail or whatever, they're also a client. So that was super weird. They sent us a picture this morning over email saying, hey, I got your Guess the Dow person here. So I thought that was pretty cool. Anyway, we got your first super duper Guess the Dow leaderboard. We got Gene, Clint, Jerry, David, and Joe to start us off.
I love it. That's all you got.
I'm done.
I thought... That was funny. So one of our clients, like you said, delivers the mail, takes a picture of the Guess the Dow envelope that we were sending on to Glade and says, hey, man, you're making me do all your dirty work for you. Well, now that same mailman, I guess, is going to deliver the same one to the same person again. So that'd be interesting to see if they think we're just sending them money. But first time ever, right? And what a great way to end the weekly competitions there. Guess the Dow, 2 weeks in a row. Not a joke, not a gimmick. Not a conspiracy, but hey, if you're playing super duper Guess the Dow, our guesses are done. You had to have them in over the weekend there. Good luck to you. We'll see who wins. First place gets $500. Second place, $250. Third place, $100. Awesome. I look forward to that. So that'd be pretty cool there. We'll see what happens. And by the way, my little $7 bet looking pretty good at the moment. Just saying. You see the?
Still early.
It's early?
Still early.
No problems with that. Okay, so he's not worried yet. It's a good thing he didn't bet the office. Just saying. All right, let's get back into the markets here. I'll go over to the S&P next. 6 of the last 7 days have been 1% days, plus or minus there. Give or take, right? Back and forth, I mean. So today, you had basically anything that could have been affected by virus scares was higher. Everybody was excited by that. Cruise lines were higher today. Here's Carnival Cruise. These are the ones I was saying, I don't know that I would take a shot on that, so definitely ones that I missed. Royal Caribbean up the exact same amount there on the day. Airlines were higher, American Airlines, even with oil being higher. If you look at the price of oil today, up almost 6%, recovering from that drop last couple weeks. So good to see them. Delta Airlines also higher on the day. These were all extended, sold off to the downside there. And, the oddball ones, Caesars, right? Wynn Resorts. Everything like that was able to help today. Host Hotels, it's a stock that we own, also higher on the day, a good 6% gain there. So there were many, many, many stocks that would have normally been affected by this Omicron. Las Vegas Sands is another one as I look around. These stocks that have been beaten down, many of those got a good rally today. It was nice to see that. The market's basically thinking that with what data we have so far, the Omicron virus is certainly more transmissible, but the effects are less harmful. That's based on the data we have now. That could change, of course, there. I just have a couple notables I'll point out while I was looking around today. Enphase, all the way back to the 50-day moving average, little price support there. So maybe in the short term, looking like something, maybe an opportunity there. And Old Dominion refused to pull back at all, has yet to pull back at all with the stock market and did not at all. And today, basing in this range here, looking like a little breakout for a transportation stock there, if you find yourself looking at the transportation sector. Okay, the NASDAQ next, all the way back down to the 50-day moving average. It was actually down earlier to start the day. You had names like Moderna, which finished the day lower, right on the 200-day moving average. And some semiconductors, like AMD started off the day quite lower, almost back to the 50-day. Xilinx pulling back as well, but by the let's say about lunchtime, they all started to rally back, and that helped the rest of the markets kind of pull the NASDAQ, help the NASDAQ get pulled out of negative territory there. And they all closed off their lows, right? So a good sign for them. I'll point out the Russell, that was technically your best performer here. The Russell is still technically in correction territory. This is well, here, I'll share it with you. This, I shared in our Notes from Jazz email over the weekend here. It's just a letter that I put together every week. It looks like this. We talked about the back and forth. We kind of transition there in the market. But down here, I was sharing the, can you see it? Not bad. This is all 57 other times since the data begins, or since the Russell begins there, that it has fallen at least 10% or more. So 10% is where we say it's a correction. 20% is where we say it is a bear market. So anytime a stock like Tesla falls 20%, okay, that's a bear market. Well, the Russell has fallen just over 10% there. That puts it in correction territory. However, the actual average correction for the Russell is 18.35%. What that tells you is basically it leaves a little bit of room, should it want to fall a little bit lower, to still be an average pullback, right? So it wouldn't be anything odd if we compare it over to the last 57 times that it happened. Also, we are now the 24th day into this pullback for the Russell. So it's been 24 days. Go over here. There you go. So from the beginning of the pullback at highs all the way down here, this is going to be 24 days. The average pullback that leads to a correction in the Russell is 73 days. So we're still seeing a lot of that. That's that weird thing where we talked about pullbacks these days happen rapid. Whereas normally pullbacks are a long drawn out thing. Everybody gets a chance, pick what you like, and you get your discount. Pullbacks in like this day and age, like past 2015, are just 10% or whatever it may be. So that's above average in that case, or below average, I guess, how you would say that there. Anyways, that's the 58th time that it's been in a correction and continues to be in a correction there. Couple things that I'll point out before we move on. Your ARK investment group. I don't hear people talk about this one as much. We would think that this would be exciting because you have this little bit of a pullback here. It's now 40% off of its highs. It's down 25% year to date, which is exactly like the opposite of what the market's up. The market's up 25%, and you've got ARK investment down 25%. It's just a really, really volatile grouping of stocks, right? So a lot of the stocks, all but two names actually in the ARK investment group are down 20% or more. So you would say all but two names in that ETF are in a bear market, right? 20% or more down. Robinhood is one of them, down to like 40%. DraftKings is another one. I happen to like DraftKings, but they are obviously spending a lot of money. So DraftKings down as well, something crazy. Zoom, you know that one as well, fading away from that virus downturn there. So I thought I'd point that out, that if you're looking at something like that, it's not a very old ETF, but man, tough times there, unless you like seeing a discount like that. What I did is I went a little bit further, and I said, well, just for some Monday fun, let's look at the software ETF. So the IGV is one of the more popular ones there. This is like Microsoft and DocuSign and things like that, all based on the software world there. And I just happened to notice it's down 9% in 9 days. So I should have had this ready for you. My apologies. I'm going to come over here and do this. It's not going to work. Watch. So what I did is I went into our little research tool here. I said anytime that it's lost less than negative 9% in 9 days, and I just put 20 years. It hasn't been around that long. And so let's go ahead and take a look at that. And we went IGV. We have to do it one more time. So I didn't refresh this page. Let me try it one more time. Charlie's tinkering with stuff there. IGV less than negative 9%, because that's a different, I mean, that's a lot, right? To see a 9%, or I thought that was odd. So 9% in 9 days. What do we have there? And then let me show the charts real quick while that's loading. You have, I'll get it one day. You got all the way down to the 200-day moving average here. So solid move to the downside there. And I was curious, does it get any worse, right? And what have I done wrong here? Let me try one more time. I should have had it. This is what I get for not having it ready. Minus 9%, 9 days. Hang with me. Do you think that's odd for it to be down that much in 9 days? And it's not working. Charlie! Let's see. Anyways, I looked earlier, and so what we have basically is in this IGV, there it is. So in this one, you only had 12 other times that it was that's happened. 9% in 9 days. The two worst times were another 12 to 14% to the downside there, right? So I thought, all right, well, if it's down that much and it tends to bounce or go sideways, I'll just go about that far down and I'll sell the puts there. So on that one, where did I put it? I didn't save it. What did I end up with position-wise? Using that data, I went to that IGV and just said, hey, all right, I will go to the 360 puts and sold those today, right? I guess they bounced a little bit. Okay. But it's just a great example of using that data, even though I can't seem to get that data at the moment, to actually generate an idea, generate a response that instead of it being your belief, or like, hey, I think it's extended, I think it's going to bounce or whatever, use the data, right? If it's there for you, So something that I played with there, and I'll keep you posted on how that goes. Because, and I don't want people to think that we're like short-term traders. I just thought I'd have some fun with some trades there while we're looking. Also, I want to point out in IGV, 9% of this ETF is Salesforce.com, CRM. Unbelievable, right? It had a big move the other day from earnings, so that's a big weight on it there. And you also have DocuSign. So DocuSign's about 2% of it. So you have like 1/10 of the entire ETF just getting clobbered from these two positions. That lost 40% on Friday. That was kind of a hectic day for that one. Other positions I'll point out real quick. The BMY from last week, that did start to bounce. I closed that one out, got 50% of the total premium. And Baker Hughes, the BKR, the ticker symbol there, closed for 45% of the premium there, and had previously sold the $21 puts. And we did that from the research site as well. How often does it fall 25% in 60 days? If so, what happens afterwards? It just happened a little bit faster in this case. So I'm going to get rid of that. If you're curious, the ideas and thoughts behind it, last week talked about that in this show here that we do. Moving on. We've got new highs and new lows. 20 new highs, 1 new low. Actually, the only new low today was Citrix. So just barely hit a new low and then recovered a little bit. But I want to point out a few things. Lennar breaking above this range here. So you've got a breakout above a range, but you had a pullback that gave you a higher low in the meantime. So think about right here. If you're looking at this stock, all right, it breaks out. You go, darn it, I missed it. I'll buy the first pullback. Lots of people like to look for that. And so far that has proven to be profitable and moving along the way, even despite falling home orders. Gallagher, AJ Gallagher moving higher, just a little breakout play. Thought I'd point that one out. Not a name that most people look at. Same with Marsh and McLennan. MMC is the ticker symbol there. Consolidation near the highs and deciding to break out. Center point, this one's, you're going to have to use this as that idea where it breaks out and it's gone, right? It just left. That's 3% already. Past the breakout, took off without you today. Hey, if you see a little pullback, maybe that's something you want to participate in, or if you own it, a chance to maybe add to a position. And lastly, I'll go with Abbott. Same concept, just a little sloppier here. The new highs list and new lows list often can help you find cool little ideas that aren't something you would do right away, but that you would come back to, right? You'd say, all right, that goes on a watch list. I'll watch it for the next few days. If it pulls back, awesome. If it doesn't, no harm, right? I didn't miss anything there. So that's cool. And let's do our stocks in the news here, and then I'll take your questions if you have any, because I see you guys got a lot of questions today. Buckle, one-time cash dividend coming your way. They normally pay out like 33 cents a quarter. They're going to pay a one-time cash dividend of $5.65 coming up there. So congratulations if you own that one. You might have noticed Del Taco, 60% gain on the day. Jack in the Box is buying Del Taco, man. They're buying them for $12.51 per share in cash. That's exactly where it closed for the day. Thought that was kind of cool. Del Taco's going to own, or Jack in the Box going to own Del Taco, man. Lucid started off the day a little bit lower. This is the media at its finest. Lucid was down like 10% to start the day. The headline is they were subpoenaed by the SEC. Okay. Actually, you could probably still see, yeah, Lucid is subpoenaed by the SEC related to the SPAC deal. All right. You then have DWAC. That headline is exactly the same thing, but that headline says DWAC investigated. Neither one of them are an investigation, a legal action of any kind. It's called a letter of inquiry, and the SEC does this all the time. They recognize something that just seems a little odd, not what they normally see, and they send a letter of inquiry, basically requesting documents. Hey, just verify to us that nothing fishy is going on here. That's all we want to know. About a year and a half ago, Jazz Wealth, we received a letter of inquiry. They asked for 14 or 17 different things. Not that anything was wrong. This was just a general one where they said, you know, we have that. Now, if I were some politician, the headline would have been, I was investigated. Totally normal. So for all the stocks that you saw, there was actually like 4 or 5 others today that were non-related, but I kept seeing that, like, under investigative action and stuff. No, it's just it's a letter. They got a letter in the mail. In fact, most of the time they just send it digitally these days, and they go, hey, you have 30 days. Send us back this stuff, and if everything's good, you should have the data, and there should be no problem. So that was a couple of those stocks in the news. And then I caught that they raised $1 billion, this DWAC. They raised $1 billion for nothing. They haven't done anything yet, so I'm certainly not convinced by that yet. Raise that kind of money and you haven't put together anything? I hope they got big plans if you're trying to do something there. Otherwise, yeah, then there might be an investigation, right? John Deere. Barron's was pretty positive about them over the weekend. Didn't do much for the stock today. They said this valuation right here is a good valuation relative to their growth coming ahead, and it goes on to explain why. Solar Edge, nice pullback, closed off the lows here for the day. And Solar Edge is actually being added to the S&P 500. There's a number of changes coming to the S&P 500. Hanes Brands is out. So as old Buffett used to say, we cover the asses of the masses. That was his thing. Well, Hanes Brands is out. Actually, Solar Edge has taken its place in the S&P 500. Also, the other one getting the boot is Leg & Platt. Am I right? Yeah, Leg & Platt being taken out. Also, Western Union getting taken out of the S&P, probably rightfully so there. So in its place, you've got Signature Brands, and not really much happened with that stock today. And the last one going into the S&P is FactSet. These guys are killing it. They charge a pretty penny for what they offer. And by the way, if you want us to use your product, FactSet, I don't know if you're watching, I'm happy to, you know what I mean, do what we got to do. But I'm not paying that to share that data on the stream here. Nonetheless, they're getting in the S&P. So you got Signature Brands, Solar Edge, and FactSet taking the place of Leg & Platt, Hanes Brands, and Western Union in the S&P. Some changes in the S&P 400 as well, but that's basically your news for the day. Yeah, I love it. I love it. All right, let's see what questions you have and see if I can help in any way. Otherwise, I'll just bow out, move on my way there. I'll take the tractor. Yeah. Nobody likes to get the letter of inquiry, by the way, but like most of the time, it's just like, what were some of the things they asked us? Prove that you have. So we claim to have clients in various states, right? We register with the SEC. They said, just prove it. Just pick some states and show us the actual clients that you have. Some of them were like, prove that this account has actually this balance, right? So make sure you're not making up numbers. If a client left, let's see the last 5 clients that left you and tell me why they left. Things like that. So not too big of a deal there. But now, if there was something going on, right? If there's some trades happening, which it sounds like maybe they think was the case with DWAC, all right, then that leads to more legal matters there. Yep. Companies removed from the S&P often outperform it over the following year. I have seen that. Yeah, I think we did a study on that for a while. And as well as the ones that get added to the S&P, they do not outperform. Yep. I know. Well, now, so here's the thing. So let's go back over here. So now you have, in the S&P, you have, 6 of the last 7 days, 1% greater moves, but back and forth, right? So there's no reason for anybody to believe that tomorrow should be solidly strong, right? If there's even a hint of a move to the downside, you have that ingrained in the short term here. People are just going to go, oh, it's just back and forth. That's just the game we're playing. All right. That's it. So you're going to have a tough time unless we start the day higher and momentum continues, which I guess the bulls would probably want that. Yep. Those puts you sell are naked or cash secured. The puts are technically naked, but it's a portfolio margin account, so it's technically against other positions. So the risk is not limited to just that position. So it's something we're working on. We set up the other office to do like an office trades kind of a segment so we can explain like, well, why'd you pick that stock? That's great that it's extended, but why not this one? To kind of show that balance between the decision between the positions there. Yeah. Yeah, man, we need some better days in Disney. I got a bunch of fun facts ready to go. Matt, why would somebody leave? Well, sadly, actually, last year, a lot of people left because they passed away. So that was, I'd say at least a dozen people. That was a tough one there. So if they were to ask now, why did people leave? I mean, that was kind of the reason. And then you have a lot of people that, like, nobody's left because they, like, hated me or anything. You would see that all over social media. But you have people that say, I'm going to try to do this myself. I actually applaud that. I say, go for it. And then you have people that had tough times. They had to drain their accounts to survive and stuff. So anytime the economy or the market takes a hit, it's always going to be people that go, I don't want to, but I'm going to have to, cash out my accounts and stuff. And I try to help, but it happens. I saw the delisting comments, the escalating, we should say. DD's officially gone, right? They have delisted. I heard they had a bad day overseas in their new, actually it recovered in China. Yeah. Started off bad. Oh boy. Saw the bounce in Alibaba today. That's a good sign, right? That's the first time we've seen anything like that since the gap back in October. If you look at Alibaba, big, massive 10% drop, recovered by a 10% gain. That's a good sign, right? So hopefully this leads to more commitment of a bottom there. Yeah. Does it change anything in the stock when it's kicked out of the S&P? Does it change anything as far as the company themselves? No, they still do what they do. They're just not listed on the S&P and usually see a little bit of selling pressure. DocuSign, I can't say I would buy the stock. Never want to be the first in. I mean, unless you're just, scalping, you're buying and selling, having your fun. You never want to be the first in when you get this knock your face off type drop. Like, I'm not going to say I'm smart enough to say that price that it reset to on Friday is the now fair value for the stock. I can't crunch those numbers. Oil bouncing, think it's rally to the upside. Yeah, just because it's extended in the short term there. Oil does not like to be extended in the short term. So when you get these extended drops and now having all those catalysts out of the way for the moment with the OPEC announcement and everything, it's back to business as usual. And there's no reason for oil to be cheaper, right? Still. I love it. I love it. I love it. Well, I'm going to wrap it up there. Get back to work doing the things we do. I'll be back tomorrow. We'll do this all over again. You enjoy the rest of your day, and thanks for hanging out with us. See you.